Hello, welcome everyone. Welcome to chapter 2. Welcome to chapter 2 on the introduction to accounting. We are using accounting principle 9 Canadian editions by the Wiley. The author will be Wagan, Kimmel, Trenholm, Warren, and Novak. Okay, so this is the book we are using. So today we're going to discuss the chapter 2 of the introduction to accounting and the recording process. First thing first, there are a number of objectives in this chapter 2 is the ability to describe how accounts debit and credit are used to record business transactions. Number 2, state how journal is used in recording the process. And number 3, journaling the transactions. Number 3, explain how the ledger helps in recording process and post transactions. Number 4, prepare the trial balance. What is the recording process? The account will be debit and credit, okay? And we're going to have a double entry accounting to make sure left and right will be balanced. Debit and credit will be balanced. It's just like walking. When you walk, you have to make sure left and right balance. If not, you're going to be limping. And then analyzing and recording transactions in terms of accounting cycle and step in recording the process and do a journaling. We're gonna do the ledger as well as in terms of posting the recording process illustrated and doing the summary, and then as well we're gonna start doing the trial balance, okay? And locating the errors where the errors are and make some process explanations. Let's start with the learning objective number 1 in how account and debit and credit are used to record business transaction. The account, individual accounting record of increase and decreases in a specific asset, liability, and owner's equity. Example will be a cash, account payable, service revenue, and salaries expense. 3 parts: account title, debit side, credit side. In its simple form, these parts are positioned like the letter T, therefore it's called the T account. Debit and credit indicates the right side, entering the amount on the left side is called the debiting, okay? Entering the amount on the left side is called debiting. Let me mention this one more time, okay? The entering amount on the right side will be called crediting. Debit balance is debit amount must exceed the credit. Credit account balance is the credit amount must exceed the debits, okay? So let's start the logic here. Account form and cash. Debit 15,000. As we got the 1,200, you got 1,500 here and 600. All the debits here. Okay, and then you got the 7,000 here, and then 600, 900, 200, 250, 1,300. So to summarize the whole total in tabular thing, in summary of cash will be $8,050. Debit and credit procedures. Debit does not mean increase or decrease. It can either be depending on the type of account. Okay, credit also does not mean increase. Also depend on the account type. Asset, it will be on the debit side. That's the normal way. Liability on the credit side or the right side, plus owner's equity. Just remember, asset is on the driver's seat. Okay, when you drive here in the North America, will be on the left side. Okay, asset is on the driver's side. Liabilities and equity will be on the passenger side if you're driving. Okay, make sure it's in North American one, not the UK one. In the UK is the reverse osmosis. All right. Let's go on the next chapter. I want to make sure in assets and liabilities and owner's capital here, assets, the normal balance, debit will increase. Credit will means decrease. That's the asset normal balance. In terms of liability, debit it means for decrease, credit will be increase in the normal balance here. Normal balance credit for the increase will be on the credit side. Owner's capital is normal balance credit will increase. Okay. Drawing and revenues, the normal balance will be debit side if this increase. Credit will decrease. Revenues, they are the other way around. Normal credit will increase. If they expand, the normal balance will be debit will increase. That is the normal way of doing things, okay? Accounting equation explains, okay? This is asset equal liability plus owner's equity. So this is the logical. Asset is plus here, debit side, liabilities will be plus on the credit side, owner's equity is plus side, drawing is plus side here, debit, Revenues or credit plus side here, expenses on the debit side. Make sure each transaction is recorded with equal debits and credits. So left and right has to balance. If not balanced, it's going to be limping, as I mentioned to you earlier. The total debit is always equal to total credit. Accounting question must stay asset equal to liability plus owner's equity. Every account has normal balance, either debit or credit. Excuse me. Let's look at the learning how objective number 2. How a journal is used in the recording process and how to journalize the transactions. Okay, these are the step. There's 9 steps here. There's 9 steps in analyzing. Okay, analyze business transaction, journalize the transaction, post the ledger account number 3. Number 4 is go prepare trial balance. 5 is journalize and post adjusting entry. 6 prepare and adjust the trial balance. 7 prepare financial statement. 8 is journal and post closing entry. 9 is prepare and post trial balance. Okay, so let's look at the recording process. The first step in accounting cycle. What is it? Number 1 is analyze business transaction to determine the effect on the accounts. Number 2 is journalize the transactions in booking the original entry. Number 3 is post to the ledger account. Okay, in the journaling, where transactions are first recorded, every company has a journal. Contributes to the recording process. What are they? Disclose complete effect on the transaction in one place and provides chronological record, help to prevent and locate the error. Excuse me. Journalizing. In terms of journalizing, okay, entering transaction in journal, use a separate journal entry for each transaction, and a complete entry consists of number 1, transaction date. Number 2, the accounts and the amount to be debit and credit, and as well as a brief explanation of the transactions. Let's look at the next slide. Number 1, date of transaction is entered on the date column here. Okay, and then the debit side, I'm going to put it here on the left side so everybody can see. The debit account, the title is enter first and left margin here. This is the first, the date, and then the cash is, and number 3 here, number 4 here, number 5 reference. Okay, cash is 15,000 debit. Number 2, Leonard Capital invested credit 15,000. Number 4 in explanation, invested capital cash in the business. So that is the logical journalizing technique. Number 2, page. Okay, number 3 here, page number 2 in the journal thing, which is number 3 here. The credit account title that is credited is indented and entered the next line column headed the account titles and explanations. You must put the explanations in detail. Okay, and then look at here the detail. A brief explanation of transaction appear on the line below credit line. A space is left between journal entry. The blank space separate individual journal entry and make the entire journal easier to read. Okay, 1 here, number 2 here, number 3 here, number 4 here, number 5 here is step by step. Okay, the column title ref stand for reference here. This is the reference. It's left blank when the journal entry is made. The column is used later when journal entries are transferred to the ledger account. So there's a reference here. 15,000 is blue, represent the color, a debit side. Okay, for cash received, capital is red one here. Okay, and then 7,000 equipment here, debit, and cash is 7,000 credit. So we're gonna do debits amounts are recorded in the debit left column as I mentioned to you here, and credit column is on the recorded and credit side on the right column here. Okay, let's look at the next one, which is the 7 separate entries with blank line, and then reference column is used later when transferred to the ledger. This is I discussed earlier in the previous slide, and list all that for each entry before listing credit. So everything has to be exactly detailed. If you go back again to the first step, look at the first step. I just want to make sure everybody understand it. This is all the step 1, 2, 3, 4, 5, 6. Okay, 6 and 7. Okay, and look at the next one. We're gonna do a simple entry involves 2 accounts, and then component entry involves 2 or 3 more accounts. So example is a more complex component entry. Cash is debit, account receivable is 2,000 debit, and then service revenue is 3,500. What does it mean? So, for example, I'm sending Somoza to 3,500 to Bank of Montreal. I receive cash payment, down payment 1,500. The rest is on account. So I'm going to book it like this: cash 1,500 debit, account receivable debit 2,000, and then service revenue 3,500. Okay. Look at the earning objective number 3. Explain how ledger helps in recording process and post transactions. Ledger is the entire group of accounts maintained by a company. General ledger contains all asset, liability as the owner's equity account. It arranged in financial statement order: asset, liabilities, owner's capital, drawings, revenue, and expense. And then posting is the procedures transferring journal entry to the ledger account. Okay. Standard of accounts example: general ledger cash date. You have a date here from September 1 to the 30th. Explanations on the different column. You got the reference. You got the debit here on the left, and then you have the credit and then the balance. Start with 15,000, credit 7,000. You got the balance 8,000. In a debit again, 1,200, 1,500. Total is 10,700, and then you get all the credit here from 600, 900, 200, 250 in each respective date. You got the remaining 8,750. You got another debit here 600. You got 9,350, and then you get another credit here 1,300 here. You got 8,050. Okay, step by step it has to be detailed. Posting. In terms of posting to debit account date, journal page number, amount here. September 1 here. You're going to have a cash journal entry. You're going to put in general ledger here 1,500 debit balance here. Okay, and then you're going to go capital. Capital is 1,500, 15,000 credit. So you're going to put it here 15,000 credit. So all the references are stated here. Number one here. You got all the way 15,000 here. Number 1. Okay. Number 2 here, you go back. Number 2 is the 101 here. 102 is 101 here. State the reference here. And then number 3, the 15,000 capital credit, you got the 15,000, and then the reference for capital is here. So it has a corresponding column. Okay, from general ledger posting to from general journal posting to general ledger. So you're going to transfer those from journal into the ledger. Okay. And then let's enter the debit account in journal reference. So it has to be detailed in each category. As mentioned to you, 15,000 is 15,000. The reference is 101. It's going to be here. Capital is 15,000 credit. It's going to be 15,000 credit. The reference is 301 there. Okay. All right. Let's look at the post-credit account, date and journal. It's almost the same thing. A repeat of what is going on. It has been stated here. All it has to be did. From journal to the ledger. Journal cash is go to the ledger cash. Journal capital go to the ledger capital. And all the credit must be put it in, right? Enter the credit side. So we go back again. It's give you the step by step. Okay. From the posting file, let me just go back again. Make sure debit go to the debit side. Okay. And then debit here, and you put everything's debit. And then put credit here to the credit, and then credit account number go to credit, and then that's the one. We're going to move to the next one, which is the chart of account. List of account that number on their accounts. Like for example, when I was working for Intech, there's all millions chart of account because they are what happens because there are a lot of subsidiaries. There's number of companies. Same thing when I was Royal Sun Alliance. Same thing when I was at BMO. There's 1,000 and 1,000 of chart account and their account related numbers. Indicate the amount that are found in the ledgers. What is this account? Usually start with the balance sheet accounts followed by income statement account. Varies by company, depends on the way of they do things in terms of their system. Okay, some company use SAP system, FICO. Some company use JD Edwards. Some company use ECPAC. Depends. If it is a small, medium-sized company, you usually use like ECPAC system or a QuickBooks system. But if you're a bigger company, they have a different system, reporting system. The system that is more common is the Oracle Financials, number 1, and then JD Edwards Financial, and then also SAP FICO. Okay, let's look at the learning objective number 4, which is to preparing trial balance. In preparing trial balance, after you analyze, you journalize, you post, you must prepare the trial balance. What are the trial balance? A list of account and their balance at the same time. Proves the debit equal credit after the posting. It has to be same. Debit and credit has to be the same. Left and right has to balance. Uncover error in journalizing and posting. To prepare trial balance, list account and their balances. Total the debit and credit columns. Ensure the two columns total are equal. Okay. Look at this example here. Example of the trial balance of Link Software. You got the debit total 28,750, and then you got the credit 28,750. That both has to balance. Debit and credit has to balance. Okay. There's limitation in the trial balance. Does not prove that all transactions have been recorded, that the ledger is correct. There are a number of errors that may exist even though the trial balance column agree. Okay. Total debit and credit may be equal but may still be posted to the wrong account or in the wrong amount. So we have to make sure, even though the trial balance there, this doesn't mean necessarily everything is correct. So the next one, you must be able to locate the errors. Okay, if trial balance does not balance, then the error is amount such as $1, 100 to 1,000. We added and recalculate in terms of account balance. If evenly divisible by 2, look at the balance, half of the error to the wrong column. If even divided by 9, look at the transposition error, reversing by the order number. Last one is otherwise, scan through the account balance has been omitted. So it is common, a human error. Instead of example, you're supposed to post 100, but instead of 100, you post 1,000, extra zero. So you have to be able to locate those. Okay. It gives you step by step on how you go about it. So that's basically on the chapter 2 on this particular issue. This is a copyright owned by Wiley San 2020. I'm just going to use this as part of my lectures. So hopefully you enjoy this channel. Thank you very much. Bye bye.